Good afternoon, everyone. I'm Alex Martinez with ExxonMobil, and I'm here representing the Society of Exploration Geophysicists. And it's a real honor and a pleasure to introduce today's panel session, the state of the seismic industry, preparing for the upturn. We've gone through pretty rough last few years, and things are turning around, and the gang today will be telling you about all of the hopeful things we're looking for ahead in industry. And so before we get going, I'm going to do a little bit of housekeeping. First of all, if you have any cell phones on you, one, you should have downloaded the OTC app already, and so please do so in case you haven't. Download it, has all kinds of good information in there, and you can actually vote on sessions and things like that. Two, turn off your ringer, please. That'll really disrupt everyone if we get a phone call. And then three, that's also associated with this or any other cameras, no photography. All the stuff here today is copyrighted by the OTC. So again, no photography, and we'll be watching out for things. And come and tap you on the shoulder if we see any photography. Other housekeeping issues are around emergencies. We don't have any planned emergencies or anything like that, or any sort of things associated with that. But if we do hear something, we are supposed to listen to what the orders are, muster out to the doors, and if necessary, when we have to evacuate, the muster area is out by the Astrodome. And so we would go out through the escalators and go down. No elevators. So with that, those are the housekeeping things. And otherwise, it's going to be a fantastic panel session. And now I'm going to hand it off to your moderator, Nikki.
Thank you, Alex. So my name's Nikki Martin, and I'm the president of IAGC, which is the Global Trade Association for the Seismic and Exploration Industry. And I'm excited and grateful to Alex and his collaboration with us and ExxonMobil and OTC and SEG, who's hosting this session today, to feature this distinguished panel of executives from our industry. And so I want to first introduce the panelists in the order that they'll present today. So we'll get an opportunity to hear from each of them before we'll have discussion as a group together, and then hopefully also have time for some audience questions in addition to polling the audience, which you can use with that nifty OTC app that Alex was promoting there at the beginning. So first up, we'll have Duncan Eley, who is the Chief Executive Officer of Polarcus. He has over 20 years of experience in the oil field services industry. He was appointed Chief Executive Officer in 2017 after 3 years as COO, and prior to joining Polarcus in 2009, he worked for several years with a strategic consultancy firm and across the energy, transport, and natural resources sectors. After Duncan, we'll hear from Rune Olaf Pedersen, who is the president and CEO of PGS. Rune joined PGS in October 2010 and became president and CEO in 2017. His previous responsibilities at PGS include a combined role of general counsel and head of the PGS legal team, with leading the communications, strategic customer relations, marketing, and corporate development functions. After Rune, we'll hear from Sophie Zurquiyah, the Chief Executive Officer of CGG. Sophie has been at CGG for quite a while, previously as the Group Chief Operating Officer and Senior Executive Vice President for Geology, Geophysics, and Reservoir Division, and she began her career with Schlumberger in 1991 as a geophysics engineer. And to her right, we have Maurice Nessim, who's the president of WesternGeco, Schlumberger. Maurice has more than 30 years of oil and gas industry experience in various management and technical positions, and is also the past chairman of the IAGC Board of Directors. And finally, we'll hear from Erik Finnstrom, who is the Senior Vice President, New Ventures of TGS. He joined TGS in 2018, and prior to that, Erik served as the Senior Vice President of Exploration Excellence at Statoil, now Equinor. So thank you to all of our panelists for joining us today. And what's really great about these panelists is not only their extensive expertise in the geophysical and seismic industries, but more so that they are passionate about this industry, and most importantly, that they are all IAGC members, which I'm very proud of and proud to represent them. So with that, a little bit about our session today. When we pulled this session together, we decided to cover three main topics, all about understanding the seismic industry. But the first is the current state of the marine seismic industry, the business strategies the industry employed to weather the downturn, and you'll hear a lot of that from these panelists, and then a forward looking into the preparations for the future as the energy industry enters a new era of growth. So looking at the efficiencies that our industry continues to provide and will increase in providing for the E&P industry, which is reducing cycle times and accelerating discoveries around the world. So I have been tasked with the first, but first a little bit about IAGC. As I mentioned, we're the Global Trade Association for the Geophysical and Exploration Industry, which is the cornerstone of the energy industry. None of this event at OTC would happen but for exploration and the foundation of exploration, which is the seismic and geophysical industry. So we believe that energy truly starts here. And on the panel this morning in this room, if some of you heard that, we had a fantastic panel of E&P company executives within exploration and America's business sectors. And every single one of those panelists talked about how important the rocks were to coming to the Americas. They came to the Americas because of the good rocks, and they have succeeded first because of seismic. And they were they emphasized that point, which I was very proud to see. Whenever they talked about technology, it was always seismic first, and that's true, and seismic continues to be first. IAGC, our number one priority as a trade association is to advance global exploration access. We have global presence. We're active in more than 130 countries. We also engage globally with regulatory agencies and governments around the world. More than 830 pages of comments were filed just last year alone in over 130 countries. And we have a global strategy. We ensure increased access for acquisition and acreage. That's our goal, and ultimately to make a global impact. The foundation of our association is formed with these 5 companies and 7 of their peers, our 12 governing members, and then also our IAGC industry partners, which are E&P companies who have joined to support the goals of the association in providing access for acquisition and acreage. The knowledge, insight, and vision that our industry provides is unmatched and irreplaceable, which again, we heard it this morning and we'll hear it this afternoon also, but it makes us a critical component to continuing exploration and development around the world. This industry has enabled and continues to enable the discovery of and prolonging of the recovery resources needed to meet global energy demand. And so now turning to the current state of the industry, Alex referenced the challenges that we've had, and here's a glimpse of where we are now. We know that exploration activity is too low to meet current and certainly not future global energy demand. And that's been because global exploration spending has been low and seismic spend has been even lower. But that slump in E&P spending has exacerbated reserve replacement challenge, as at least 15 countries are witnessing production declines as supply is utilized faster than it's replaced. The global vessel fleet has also shrunk over the past few years and starting to expand again, but this is on the screen reflects the current state of the 3D, at least seismic fleet, as of March this year. And you'll hear this panel and the different presentations speak to the supply and demand and the pressures on this fleet and expectations we have for that in the coming years, as the availability will continue to be critical to meeting global energy demand. Another important challenge is that there is a global movement that seeks to ensure that exploration for oil and gas does not increase. And this movement has really focused on pinpointing seismic surveys. Not only do the executives this morning recognize that it all starts with seismic, but so do organizations that are solely focused on preventing oil and gas exploration from increasing. And so that has continued to be a source of their focus and their funding efforts, and we see that around the world. Permitting seismic has become a linchpin issue. I have one member who I've quoted him profusely now, but he said, "I used to be in the business of acquiring seismic data, and now I'm in the business of acquiring permits," and that has become quite true of many companies in the past few years. The path to access has also become increasingly marked with uncertainties, risks, and delays as organizations, not just environmental organizations, but other NGOs get involved and pressure governments to make restrictions or change the rules for companies as they enter the market. And political instability and calls for bans from Costa Rica to France to Ireland to Denmark, New Zealand, now Ireland, even Lofoten, some of the most prospective areas in the world, make industry investment even more volatile. We believe and we know that for the industry to succeed in meeting the global energy that's required to meet demand, we must explore. And for exploration to survive, there must be an increased fight for access. And the prioritization and recognition of the critical role of seismic is an important first step. And that's why we're excited to be with the OTC today. But there is opportunities and there is a positive. As I said, global energy demand is increasing and oil continues to be the primary source of that global energy demand. We know that the population of the world is burgeoning. It's becoming more urbanized and countries increasingly aspire to eradicate poverty, all of which increases the demand for natural gas and oil. The global population is expected to grow 2 billion in the next 30 years, which is about adding the size of Dallas population per week, if you can imagine that, to the world's population. And so we know that it'll continue to grow. And then the multi-client represents the majority of seismic spending, and we've seen that trend over the past few years and even before the downturn, and that continues to increase. You see the spending numbers are referenced earlier, but the positive is we are seeing relaxed cash flows and spending and exploration is up, and spending on seismic is also up at least single-digit percentages and expected to grow. We also see higher growth in new technologies and new sources of surveys such as ocean bottom nodal, which is also putting pressure on the 3D seismic market. Looking ahead, we know that the exploration and geophysical industries will remain critical to value creation and sustainability of the entire oil and gas industry, and that growing global energy demand, again, cannot be met without increasing offshore exploration and prolonging the life of assets. We know that budgets require a higher confidence in drill decisions and reliance on seismic to reduce risk. And we see a growing competitive market amongst producing countries looking to attract and maintain exploration investment. So with that, I'm going to go ahead and turn it over to our panelists to speak to where they see the industry, where they see their company, and how they have managed to weather the past few years, and how that's setting them up for success in the years ahead as the energy market continues to transition. So Duncan, welcome you to the stage.
Thanks very much, Nikki. So, as Nikki mentioned, I am the CEO of Polarcus. We are a focused marine geophysical company. So, we're established in 2008 with the founding vision of being able to responsibly expand the frontiers of seismic. And I think we've certainly achieved that. If you see the map up here, we've literally hit all four corners of the world, from New Zealand, bottom right, Falkland Islands, bottom left, Baffin Bay in Greenland, top left, and Sakhalin in Russia, top right. So it's been a really interesting journey. Our footprint is across the globe. We're headquartered in the Middle East with regional offices here in Houston, in London, and in Singapore. We own 7 vessels. 4 of those operate in the global marine acquisition market. 2 of them are on long-term bareboat charter. And all of our vessels use towed streamer. So we'll probably talk about a few different technologies today. But recently we've actually moved into hybrid projects where we manage not only streamer projects, but ocean bottom node as well. And I'll come back to that point. In terms of market share, it's been a pretty interesting journey. Nikki showed some stats just then. In 2013, I think we had 10 of those 60 vessels, 6 of 60 vessels, so around 10%. And in 2019, we have 4 of 22 vessels active in that global market, so around 18% market share, as you see there. So on to the next slide, you see a fairly simplistic view of the ANP cycle, or investment cycle, if you like. So again, some people in here know seismic extremely well, some people know it less well, but where we target and where we add value in this space is really in three main areas. You can see in 3D exploration, where we're looking at large-scale operations with a focus on efficiency, maximising coverage across large chunks of ocean data, and this has been really hard hit during the downturn. So we've really only seen meaningful activity come back during 2018 and 19. In the 3D appraisal part of that cycle, that's where we see more targeted seismic surveys, typically in brownfield or known producing areas. And that's typically where we've seen lots of deferred commitments around the world in all jurisdictions. So again, it's really only in 18 and 19 where you see this more targeted 3D appraisal activity building. And then once you move into the production phase, of course, seismic provides a significant value add when you talk about monitoring changes in the reservoir over time. So this has remained relatively strong as the E&P companies remain focused on optimising production, sometimes and often at the expense of exploration over the past few years. And it is in 4D where we see the opportunity for towed streamer and OBN to work together in some of these obstructed and challenging areas. So I'd also like to highlight that timeline. Just if you go back on that slide, you'll see that we've got a timeline of nominally 7 to 10 years. And I think every single E&P company that I talk to, they're putting self-imposed challenges to take that timeline down to more like 3 or 4 years. And of course that varies quite a bit, but these nominal figures ultimately trying to halve the time from the start of exploration through to production. And again, I'll come back to that point later. So on to the next slide. It's, I think, an interesting view of the supply and demand developments from 2014 to 2018. So active supply has reduced significantly, I think, as Nikki showed, from 60 vessels operating around the globe in 2013-14 down to around 20 vessels now. So on that chart also you see Brent oil price on the, I should have really had WTI, but anyway, it's Brent on the right-hand side. So we see the correlation, pretty close correlation with E&P seismic tender activity in the dark green and the oil price. So interestingly, with a conservative estimate on E&P company seismic tenders during 2019, we expect to see there on the far right of that chart, 70% of the current global active fleets to be taken up by direct tendering from E&P companies. So that's a positive development from our side for sure. And so that only leaves 30% of those 2022 vessels to be allocated to multi-client activity, which is typically in the recent couple of years required 30 to 40% of that current global fleet capacity. So this gives us comfort that things are tightening. There's been quite a lot of discipline on the supply side, and we now see demand coming back. So that bodes well for the marine acquisition market going forward. So on to the next slide, what have we been doing? And I think there are three headlines here. We're going to be talking about focusing, about streamlining, and also about innovating. So this schematic here we've referred to as the bifurcation of the seismic industry. So we've strategically positioned ourselves as what we believe is the leading vessel owner and operator as the market moves into recovery mode. So this bifurcation, you can see there that there are two basically important seismic segments for those guys down the bottom, where you have the marine acquisition segment. So that is the E&P companies, scooting all the way around the right-hand side, dealing with the whole tranche of E&P companies. And then you have a growing number of multi-client companies who no longer have any vessels. So we see the number of competitors reducing in the marine acquisition space, with both WesternGeco and CGG announcing the exit of their respective marine acquisition businesses. And we also see the number of clients in the pure play multi-client segments increasing, with both CGG and WesternGeco again joining TGS in that place. So an interesting developments in this segment over the last couple of years. And on the innovation front, it has been an essential part of Polarcus' DNA since we came on the scene in 2008. Our ability to continually challenge and somewhat disrupt the industry is something that we're pretty proud of and something that we will continue to do. And it has been key to navigating our path during 2014, 2018. On marine acquisition services there, on the far left-hand side, sorry, next slide, Mateo. On the marine acquisition, sorry, can you just go back one? Could you just go to the next one, sorry, next one? Perfect. On the innovation front, you'll see that, that basically on marine acquisition is where we've optimised efficiency and data quality through survey design firstly, but also some good old-fashioned preventative maintenance. So maybe not exciting innovation, but it's certainly enabled us to deliver technical uptime in excess of 97%. And when we look at project sustainability at the bottom left-hand side of that slide, you'll see that we measure our sustainability of projects through pure fuel consumption per data point. And so that's been reduced by 30% over the last 4 years. One, by increasing the volume of data, so primarily through cross-line data sampling, and through reducing fuel consumption. And that's a focus on decreased drag of in-sea equipment. So our geophysical solutions are something that we've always cultivated in conjunction with our clients. X-ray that's referenced there in the middle. That's been very, very key to improve our data quality while maintaining efficiency. So a simple geophysical concept of introducing additional energy sources as opposed to banging more streamers in the water. So we find that that has been very successful in gaining the attention of our clients. 60% of our acquisition in 17 and 18 was acquired with X-ray. So working with our clients, we also identified this niche that I've referred to, the combination of towed streamer and node. So we actually think that that provides a perfect combination in certain environments to match up economics and data quality to deliver a a seamless image in some challenging obstructed areas. So these hybrid areas are something that we watch carefully going forward. And again, I'm sure we'll hear more of it today because there are some serious players in this room, but big data is what everyone's talking about, and in particular, using intelligent data management to compress the timeline that I talked about, that's 7 years to 4 years. I think this is where the seismic industry can really add some value. So we see that think that we're actually leading the way in terms of optimising our fast-track data processing solutions to facilitate E&P company decisions, their decision-making related to offshore hydrocarbon structures. So I think that's a really important space that we are actively involved in. And I'm sorry, Mateo, if you can jump back because I did mess you up there. So just on this, when we look at this streamlining, it's probably some of the more rudimentary stuff that we as an industry have done, but it has been key. All of us have been through it. So on our cost efficiency, we have actively embedded sustainable efficiencies and cost reductions on our supply chain. So that's seen our cost of sales down 50%. On the support side, we've centralised like a lot of organisations, so we have a very efficient structure, centralised corporate, and we have distributed marketing and sales organisations across the globe. So there's been a big rationalisation, and I think it's introduced some efficiencies. Yes, there'll be some elasticity of this, but I think this is not dissimilar to the industry at large and has offered some benefits, but it has been tough. And at the bottom there, our focus on capital discipline. So for us, key part of capital discipline was actually exiting the multi-client space. So we are not speculatively investing in the multi-client business. And that's all the way through to responsible CapEx budgets associated with our vessels. And the big ticket item for all of us in the towed streamer space is how we manage our streamer inventory. And Polarcus, like everyone, has actively pushed that out in time. Our handling of our equipment has been improved, and we are pushing, we're actually increasing our in-house repair, so deferring that spend because the industry is still not in a space where it justifies that reinvestment at this time. So jumping on to slide 8, and a little bit of a view. Sorry, can you just back it up one more? Yeah. So we do, one of the questions is, are we really in recovery? And our view is that the underlying fundamentals are in a very, very good spot. So if you combine the impact of demand growth, and if you look at the supply depletion, then we get an approximate figure of around 40 million barrels of oil per day deficit approaching 2025. So Polarcus is fully supportive of alternative energy developments, but the reality is that we do need to responsibly manage hydrocarbons as an important baseline energy source for our planet for at least the next 20 years. So coming back to the ANP cycle, and I think that reinforces the prioritisation of our clients, the ANP companies, that refocusing on offshore exploration for high volume reserves replacement is key, and pushing technology boundaries to reduce timelines and new exploration timelines from new exploration to production, and 2025 is not very far away when you look at that energy gap. So moving on to the next slide and some of the risks. We just go back one. Yeah, thanks. So if we look at the key risks as our industry starts to stabilise and even improve, dare we say it, but based on the premise that activity is improving as we speak and it will continue to grow in the short to medium term. Now, these are the risks that we see from our perspective, and I think they're indicative of the risks we see across the broader industry. Volatility, so the underlying fundamentals we believe are very good, but I think we're going to see at least seasonal and geographical volatility, and we're going to see quite reactive client base. So I think as an industry across the board, we need to be able to react to that effectively. Linked to that very closely, of course, is people, and the attraction and retention of the best people that we have is, I believe, the biggest challenge of the E&P industry, full stop. Our focus on the environment in Polarcus, it's been a key differentiator for us, and that has been able to attract people into Polarcus, but I think we need the whole industry to do a much, much better job of accurately promoting the oil and gas industry as an important, responsible and constructive industry that will underpin our transition to future energy sources. Safety is a big one that I think is coming, and I've said this on several occasions. When we have new people coming into the industry over the next few years, when we have new assets being activated, we've got an additional challenge on how we make sure those people and the environments that they work stay safe and stay sound. And we'll need to do that by responsibly managing our growth, and that is key to Polarcus going forward. And we need to build on the existing excellence in safety and operations going forward. So just the wrap-up slide, we do believe that we are a clean fit. See the link with the environment there, a clean fit with the evolving industry landscape. So I hope I've shown you that a few key things. The client base of marine acquisition, the guys that run boats and deliver services, that is increasing. The competitive landscape continues to reshape in both the multi-client and the marine acquisition space. Focus on the environment's becoming more important and more central to what our clients want to achieve, and clients' expectations, unsurprisingly, continue to increase. So that's from the basics of delivering safety and operational excellence and focus on the environment through to the extreme challenges of reducing that timeline that I mentioned and enabling the imaging of much more complex geological structures. And clients do know exactly what they want, and we need to react to that. And with oil price back to more sustainable levels, we see E&P spend growing in order to address that energy gap, and we see not too far in the distant future. So it's been a somewhat traumatic period for the whole E&P industry, and particularly marine seismic. But as they say, what doesn't kill you can only make you stronger. And we look forward to the challenges that it no doubt will throw up going forward. The opportunities for the marine seismic industry, I believe, are significant, and I'm excited about our role in that going forward. So I think I've blown the buzzer, but thank you and good afternoon.
Quite literally, I didn't know there was going to be a beep on that. I turned it off. Thank you, Duncan. So next up, we have Rune Pedersen, the president and CEO of PGS.
Good afternoon, everyone. Yes, I'm the CEO of PGS, and we are a fairly large seismic provider. We have all elements of the seismic chain, to put it that way. We have a fleet of vessels, which is about twice the size of Polarcus. We operate both in the multi-client space, in the contract space. We have a large imaging business, and we have R&D that feeds all of this, and I will come back to the importance of that as I move through it. Before that, I will go through a little bit of a few slides of why we believe we are in an upturn, that we have seen the worst behind us. Next, please. Yeah. And I will move fairly quickly through this, but although the current macro environment is uncertain, I mean, there are plenty of uncertainties with US, China, you can mention these days. The near term is a bit shaky on the macro side. I would argue that the long term, up to 2040, is quite strong. We need more exploration, we need more production of oil and gas in any meaningful outlook for the world. Here you can see the mix. Oil and gas will need to take a large part of that, whatever you believe of renewables. Most companies that predict the future in this respect have a very rapid and strong growth on renewables, and here I believe I have BP and Exxon. They also do that, but even so, there is a large mix of oil and gas in it, which needs to be replaced as we go forward. So if we move it a little bit closer to home, to put it that way, yes, we know, our clients know, that we need to search for more oil and gas, we need to find more oil and gas, we need to produce it for the world. That isn't going to happen if our clients can't afford it, whether we believe that's the case, rationally or not. And that is what happened in 2013 to 14, was that our clients had a cost base which was too high, and above $100 if you take the cost base and equate it to a barrel per oil. And then the oil price dropped to 27. Obviously, that is not a sustainable business for our clients, and then they stopped spending on exploration, and in particular on seismic. Now today, that is a very different matter. If you go back one more. There we are. Today, that's a very different matter. Here you can see that on the light blue line, you will see the break-even for the largest oil companies in the world after dividend and capex. It is below $50 if you translate it to the barrel per oil. And obviously, all of you know that the oil price is currently hovering between 65 and up to 70. So our clients are making a lot of money. So they should be able to spend some of that money to cover the energy need we have seen. And that is what's going on. Seismic has always been the leading indicator for offshore spending. Normally, offshore spending, the change in offshore spending and the change in seismic spending follow each other. That broke last year. The change from 17 to 18, the offshore spending was down, seismic spending offshore was up. An early indicator that we are in an upcycle. And we have seen the same predictions for this year, where we believe actually the offshore spending will be marginally up from 2019, and we believe seismic spending will be quite a bit up also this year. So for the second consecutive year, seismic spending has increased. So for the seismic industry, 2016 was the bottom. And from there on, we are gradually improving. And yes, you can see the gray marks better than me. But if you look at the lower slide there, you will see two things that I want you to focus on, and that's the multi-client spending and contract spending. If you see the multi-client spending is in light blue, the contract spending, which is which is mainly what Duncan does, where oil companies hire in our vessels and pay a day rate. Multi-client is where we invest and sell it thereafter. What you see in 2004 to 2006 was that multi-client moved before, and then it took a little while, and then contract moved, the start of a cycle. You can see the same thing happening after the financial crisis in 2009 and 2010. And if we fast forward until today, you will see that the light blue is starting to tip up. Currently, it's the multi-client spending that has been driving the increased spending from 16 to 17 to 18. And we believe that now the contract spending will follow suit, as it has done in other upcycles. And this is part of the reason we believe that we are on the start of an upcycle in our industry. So to PGS, we typically monitor what we call bids and leads. That is the dollar value of all the bids we have in-house at any time. That is the blue line you see there. And you can see it was fairly high up in 2012-13 and quite low in 16 and 17. The light blue line is the blue line plus a risk dollar value of all the leads. And that basically is when our clients tell us that we're going to do this and that. So what we see is that another example of an upcycle, namely that the bids and leads are quite dramatically going upward. And this is the same, basically just showing in a different way, the same slide as Duncan was referring to on the contract side. And therefore, we believe industry activity is set to increase into 2019, and I think that is what I say. Well, okay, I can focus on, if you look at the lower bottom slide there, you will see the number of streamers in the water. In 2013, we were approximately 600 streamers in the water, and now we are just north of 300. So basically half of the industry capacity is taken out during this time. So therefore, the supply-demand balance makes a lot more sense for the seismic industry currently, and we are seeing pricing increases going on. One particular segment which I need to explain because it's important to strategy, and that is the 4D segment. This is reservoir seismic. Now we're not talking about exploration seismic. What we're talking about now is if you have a large reservoir, typically in the North Sea, in Angola, in Brazil, are areas where this technique is used, you would like to know what happens to your reservoir as you produce it. Where does pressure move and things like that, so you know where you want to put your next production well. So reservoir seismic, or 4D, where the fourth dimension being time, is where you shoot the same area over and over again with 2 to 5 years intervals. This, as you have seen on the top there, has grown dramatically. And this is probably the largest growth area for us currently, because exploration seismic really hasn't picked up. And on the lower side there, we show the level of that kind of seismic being shot with a new technology, a multi-component streamer, that's the light blue, and then the more, call it existing or conventional streamers, the dark blue. So here you see a very large part of the 4D market being taken over by the new technology, the multi-component streamer technology, and we have 70% of the vessels in the world with that kind of technology. So obviously we have a very large share of this growth market. So what have we decided to do in PGS? Well, this seismic industry has evolved quite a bit over the last 5 years. 5 years ago, there were at least 4 or 5 companies who basically looked the same. You had WesternGeco, you had CDG, you had PGS, you had Fugro. We all deployed the same strategy. We all owned vessels. We all owned large multi-client organizations, and we offered marine contract services. We had imaging business, and we had R&D on all of this. All of us had that. Now, if you fast forward, WesternGeco has already exited the vessel market and are therefore now an asset-light player together with TGS, only operating in multi-client and imaging and with R&D on that. CDG has said that they are moving the same way, so they want to exit the vessel market. You heard Duncan explain that they are no longer doing multi-client, so they're on the opposite side of the spectrum where they operate vessels and are only operating in the contract market, and there is another player doing exactly the same. And we are left in the middle, to put it that way. And that is by design, by the way. We believe that the integrated model works. It works in an upcycle. We have been through very difficult years, and obviously owning vessels has been very, very difficult. But the world is about to turn, and we believe that there are many benefits of being integrated, as I will come back to. And therefore, what you see here is a snapshot of, or an overview of our strategy. And because of the downturn, we now need to focus on profitability before growth, and we need to focus on return on capital employed. We have lost a hell of a lot of money over the last 5 years in PGS, and I think that it goes for our clients or our competitors here as well, except for maybe TGS on the end, which has had an asset-light model. So now it's time for us vessel owners to get them back. Anyway, so we need to focus on our capital structure, and we need to focus on delivering that. And the way we're going to do that is by being integrated. We believe that gives us flexibility in business models. It doesn't matter for us whether we do contract, multi-client. Our clients want data, and we can deliver it in any way they want it, any form they want it. We believe it gives us benefits in the multi-client space where we compete head-to-head with TGS, with WesternGeco, with CGG, because we will have access to our vessel at the same cost. And obviously, as the vessel market picks up, that access to those vessels will be more expensive for our asset-light players and giving us a benefit. We believe, you heard Duncan say that one of the challenges of our industry is to reduce the cycle time. We believe by being integrated and controlling all elements of the seismic value chain from planning until delivery of the final product, we are best placed to achieve that. And with our technology, as you heard, we deliver and have by far the largest market share in 4D, which is the growth market and the profitable part of the contract market currently. And if you're going to do R&D on seismic, well, you better control your assets. It's difficult to do R&D on streamers, on streamer configurations, if you don't control your assets. So we believe it's a benefit in R&D as well, and this is why we believe that the fully integrated model that everyone used to apply, and we still do, will be the winning model going forward. Anyway, I told you that the 4D market is the premium market. I'm not going to say more about that. You see the growth here. You see the adoption of the market. The importance is that this year we have booked now these data sets. It says here that we've booked 54% of our contract capacity. We've actually booked now more 2/3, maybe up to 70%. And of that, more than 2/3, or more like 75%, is in the 4D segment. And that has led to a price increase for PGS of more than 35% versus the average prices last year. That sounds like a lot. So now everything is, okay, these guys are making a lot of money. That unfortunately only equates to moving from being a loss-making contract business to being actually a profitable contract business. So that's where we are in the current market. We're starting to go up to becoming a viable industry again, where it's possible to make money. And 4D is helping us doing that. These are some slides showing our size in the multi-client part of the market, namely where we shoot and invest, put the data in our library and sell it to multiple clients, where we take some risk, but also where it's possible to make money. And this business has been profitable and money-making for PGS throughout the downturn, exactly as it has been for TGS. And we've been delivering similar results in this area. So, where are we now? Well, we lost a lot of money in 2015. We lost a lot of money in 2016. Lost a hell of a lot of money in 2017. We did everything Duncan said that they did, namely streamlined, reduced capacity, reduced cost. And in 2018, for the first time in several years, we were cash flow positive after debt service. It's kind of turned the ship around, to put it that way. In 2019, we are set to deliver quite a strong cash flow, which we can use for debt service. This assumes that we will achieve the bar to the right, to the left, which is analyst consensus estimate of our revenues for this year. We don't give guidance on that. So we feel that PGS and the industry are set to benefit from the upturn that is set to come. So in summary, we believe seismic market is in recovery. We believe that our clients will have to increase CapEx. Some clients have started to do so, and they have the means to do it. PGS as a company, we will focus on being profitable. return on capital employed. We will be careful with growth, CapEx. And we will focus on our multi-client business, which has been profitable all the time, on our 4D business, which is now turning profitable, and to the whole integrated solution, which we believe will benefit us in competition with our peers. So, thank you.
Thank you, Rune. Next up, we have Sophie Zurquiyah, the CEO of CGG.
CGG, yes. Hi, everyone. My name is Sophie Zurquiyah, and I'm the CEO of CGG. I'm going to take a little bit of a different view on this presentation. I wanted to share with you what client trends we're seeing, and some of them have been discussed previously, and what we're seeing, our belief of what the industry, how the industry, our industry has responded to those requests or those changing requirements from our client base. So it's not going to be so much about CGG and what we do and the current environment, but more, what's happened, how our clients have adapted into the downturn, and what has been the response of the industry into that. So just quickly, CGG, what we now position ourselves as a people, data, and technology company, and you'll hear this through the theme. And what we focus on, obviously what we do, what we aim to do is to reduce the risks and optimize the discovery and development of natural resources. You hear a lot about two things as efficiency. So as an industry, how do we do what we have to do, which is eventually produce oil in a much more efficient fashion. But efficiency doesn't help you if you don't do a better job at it, right? If you don't increase your success factor, or if you extract more oil out of your existing fields. So it's not just about doing it faster, but doing it better. And so I'll highlight some of the elements on what it means to do that. So if you can just go back on that slide. So as was mentioned earlier, we have been in the acquisition market, and what we've seen in the, we still are actually to some extent, but during the downturn, that part of the business has become a commodity. So what we've decided to do as part of our strategy that was announced last year is to focus on what we consider our strong core businesses that are differentiated, again, around the people, the data, and the technology. So that is the geoscience when we add value to the data, so not just the seismic data, but the geology data as well. The multi-client data, so this is our data library, and actually quite different maybe from other players that we have our equipment business where we design and manufacture equipment for the industry. You can go to the next one. So what have we heard through the downturn, and as Rune showed it, clients started to lose money after the oil price dropped into the 20s and 30s, and so there was this sense of urgency to get that break-even oil price that they function at a lower number. So that was all about accelerating the cycle time, doing what they're doing in a much faster way, focusing on shorter cycle and shorter returns projects, so accelerating the, de-risking and accelerating that exploration, as well as, so that's what you heard about, step-out exploration. So this whole frontier exploration, going to some of the Africa places, Arctic, and all of that has disappeared, during the downturn. So a lot of what we heard is, how do we find oil around existing infrastructure, around existing fields? So it's kind of where we've added value in providing those images of the subsurface has been around, mature areas, is trying to find new plays there. So the other angle is, of course, around these existing fields, how to extract more. So more and more of what we do is aimed at focusing on those existing reservoirs and, understanding them better and trying to extract bypassed oil and tie back, into existing infrastructure. Now, how do we do that? A lot of the talk is around digital. How do we leverage all the data sets that we have? And every oil company, and us as well, have different data types. How do we de-silo all these data types, put them together to improve the outcomes? How do I increase my recovery factor? How do I increase my exploration success? So we can go to the next one. So how the industry's responded, and I've boxed it into 4 areas. I'm sure you could find more, but those are what I think are the key ones in our sector, obviously. So the first area is the advances in imaging technology. So it's not just here about making it sort of cheaper, but making it better. So this is where a lot of the value is. So you see it's the cost benefit versus then just purely the cost here. So the cycle time or the advances in technology in the processing field is about 12 to 18 months. So basically, it's quite fast. If you look on the hardware side, you don't come up with a new hardware widget. It takes you sometimes 5 years or more. In that world, it is much faster paced. So every 12 to 18 months, there's something new makes a difference in the market, and that drives a lot of reprocessing, going back to existing data and extracting more of this existing data. And that has been enabled by the exponential increases of compute power. I don't know if I have a slide on that, but for us, it is the last 2 years, and kind of strangely enough, during the downturn, we've kind of doubled almost every year, or added significant amounts of compute power, because that has enabled to really substantially improve the understanding of the subsurface, helping our clients increase their reserves, de-risk their exploration, become more successful. And it has been a quite differentiated activity. So the second one I wanted to comment on, and I'll give some examples there, is the multi-client data model. As was mentioned, during the downturn, clients have moved away from the contract work to multi-client. And because what multi-client allowed to do is to be more efficient, to acquire more data at a cheaper unit cost, because one, this data was acquired in larger chunks, so it was more efficient just from the pure cost perspective, but as well because of the multi-client model, where clients actually during the downturn decided that they were ready to give up on sort of the exclusivity of that data, kind of all of a sudden sharing the data with competitors, because the value would be in the knowledge and the value add that they could put into that data. So that was kind of a big shift in mindset that happened, and that sort of benefited the companies that had a strong data library. So mentioned here the reduced costs, operational risks, and then, of course, when we do our multi-client, and like everybody does, we try and throw the best at it. So we'll use the best processing techniques. We use this to advance the technology, because we can show the results, because it's not proprietary data. We can show the results to the markets and to our clients. And we can test different things there around machine learning and data analytics. The third aspect is this whole digitalization. So I think when I say that, it means something different to everyone in the room. I'm going to tell you what I mean by digitalization. So I look at it as first, the first layer, if you want to be able to achieve anything meaningful, is you have to have the data digital. Kind of sounds basic, but today, we don't all have our data digital. In the seismic world, yes, it's been digital forever. But if you start looking into geology, and we've got lots of geologists in CGG, there were lots of books, and they called them the red books. And so they were big, thick red books that were paper. Of course, they're PDF, right? But that doesn't change much. But so we've spent a lot of energy, started 4 or 5 years ago to get all this data digital, and I think our clients as well and equally are in that same journey. So get that data digital. Now, it doesn't help you to have the geology on one side, the geophysical on the other side, the petrophysical there, and within petrophysical, you're going to have the rock properties and the geology logs, and then you're going to have the reservoir data, production, etc. You need to start breaking up those silos, and then you need to find a sort of a classification, a taxonomy that can connect these different elements together. So for me, that's the basic layer that has to happen in order for things to improve. So the second layer of it is, once you've got all this data digital, how can you do what you have to do? And I'm talking here still in the understanding of the subsurface faster. So it's nothing, you're not inventing anything, you're doing what you have to do, but how can you, using this data, using machine learning, do what you have to do faster? And that, of course, the big deal there is, how do you drive change, within the supplier's organization, but within the client's organization to get the benefits of that. And the third one, which is maybe what everybody wants to do, which is to me further fetched if you want, is how do we completely rethink the whole workflow and maybe instead of doing things in a sequential manner, going straight at the outcome, which is eventually I want to understand the potential, how do I produce that field, right? And what kind of, production profiles, how do I develop the field? Those are the answers that all of this work is geared towards. But this is not going to be automated, I believe. I think people are quite fundamental to what we do. But those techniques will help them be more efficient for sure and improve the outcomes. And the last element of it, it's how the acquisition techniques improve or can provide an improvement in the images or the understanding of the subsurface. The key one I would mention is the nodes. There's definitely that market is picking up tremendously. You heard about 4Ds, definitely an important one. Different ways of acquiring with streamer vessels, but to me, the next frontier in improving the quality of understanding of the subsurface is around the nodes. And we've seen more and more surveys that used to be done by sort of streamer technology kind of moving into nodes because they just provide a better image in the end. Next one. Just give it really quickly a few examples. Here's about advancing imaging technology, and we had to show some images, I guess. So you see a legacy image and a reprocessing, and you can see just that velocity model is way better, and then you start seeing the different sedimentary layers, and so it just allows you to do a better job at exploring and developing that field. So you go to the next one. Here's a Multiclient. It's an example of land seismic, and in fact, land. I'm talking here U.S. unconventional. It's a prime example where I would call it low tech, and I'm sorry if I offend anyone. In the world of offshore, we use data densities that allow us to provide good quality image, I would say. But on the land side, what we found out is that it's pretty basic. And what we've tried to do through our Multiclient, because we control the parameters and the acquisition to drive increased data density to be able to provide better answers. And of course, that's done in a more efficient manner. The right side is a Norway example where we've tried to create integrated data packages in the sense of cleaned up data set that it was not just the seismic, but included as well as some log data, core data, so that the client had data set to start with that made them work more efficient. Next one. That was just the one on compute power. You see just tremendous increase in compute power, and then you see what we're aiming for. It's 259 petaflops. The 259 petaflops, you're talking to the 10 to the power 17 flops, which is a big number. All right, next. So this is here where it's just an example where you could, just talking about one of the new workflows. So it's not necessarily doing things, in that category of completely rethinking the workflows, but doing a better job at what you're doing today and then using machine learning algorithms to try and populate reservoir property information between wells. There's been lots and lots of methodology to try and find out what was going on between well data. Well data is kind of more or less ground truth. And then here, how with the seismic you can do, with machine learning techniques, really do a better job in understanding what's going on between wells. Next one. That's an example about nodes, and where we, in a place where we have, this is in Brazil, you had a towed streamer, an image created with towed streamers, and then the same image with the OBN, and then you could see just the striking difference and the improvement that the ocean bottom nodes are bringing to that image. So I kind of tried to cover, the different facets of how what clients have been asking for and how we and our peers have tried to adapt to those demands. I think moving forward, CGG is well positioned, with people, the data, and the technology But beyond anything, I think it's important to, in order to drive efficiencies, to work collaboratively, not just, with our clients, that's very important, but as well, in some ways within our industry as well, on in particular when in exploration, you see clients working together in exploration, de-risking that exploration. And I think in a similar way, you've been seeing that there's more and more projects, especially on the multi-client side. And when it comes to certain more risky areas, you say in Africa, for example, that we'll be working more collaboratively within the peer group to try and de-risk what we're doing as well. Thank you very much. Good on time?
Thank you, Sophie. And next up, we have Maurice Nessim, the president of WesternGeco, who I'm sure will continue on that theme of collaboration. Oh, as your title says.
Thank you very much. I would like to start by saying that we've been in a crisis for a long time, and I think we are still in a crisis. So I might differ with my colleagues that it's not that bright yet, but I think there is possible good feelings there, but it's not yet very clear how it's working. What I'm going to go through is quickly, I'll go through we'll cry a little bit, with all the other geophysical contractors here for a couple of slides. And then after that, hopefully we're going to try to show you some possible solutions moving forward. So I'll start by the first slide, and I'll go quickly through those slides. Okay, so you've all seen the slides from my colleagues here, and my partners also. Is exploration have been going spend has been down, and also particularly in seismic, it has been also down significantly. Next slide. Okay, go back one. So, go back one. Okay, so the seismic business fall, I showed the slide before, and I would like to show it again, that the seismic industry have lost $4 billion in the past 4 years, which is something that I don't think any other industry can afford. But I think this led to lots of bankruptcies and lots of mergers and lots of different business models. So that's a challenge. Next slide, please. And then the biggest disappointment, of course, is the fall of the R&D. So R&D, we've been spending lots of money in R&D, $2.2 billion in the past 8 years, and it's falling now significantly. Nobody is spending in R&D significantly, especially in acquisition technology, because it is not returning to us the rewards. Next slide, please. Okay, now the impact of the people is actually dramatic, because we lost thousands of people, and they're very good people, experienced people, and I don't think they're going to come back to the industry. So that's part of the downturn. Next slide. Now, of course, what happens now for the oil and gas companies, it's a disaster, in my opinion, because there is no new discoveries, or the discoveries went down by 70%. So from 2012, if you look at the slide, it goes down to 70% lower in discoveries. So we're not discovering because we're not spending on exploration. So that's, of course, is a problem. I don't think it's going to last for long, because people are going to start realizing then they need to spend in order to discover. Next slide. Now, the question is, are we in an upturn? So the spend now, if you look at this represents the revenues of the oil and gas companies put together. So the oil and gas companies' revenues are getting higher, and it's actually quite positive because of the price of oil that's increasing, and of course lots of other things that the oil companies have been doing in order to improve their revenues. Now, I want to point your attention to the green bar below. This is the free cash flow. So the free cash flow for the oil companies have increased dramatically. So if you look at the green cash flow, it gets to the same number like the 2012. It means that there is cash in the system now, in order to be able to spend, hopefully, in discoveries. I think some oil companies would prefer easier to go and buy other companies so that they can get already oil which is in place and not to find it's much harder to find new oil. It's not good for us, but it's something that is each company is going to make their decision, how could they get their competitive edge fast. So next slide. So what is encouraging? I get into a little bit of an encouragement part and see what can we do together. I'm a little bit like Sophie, I'm not going to talk specifically about WesternGeco and exactly what we do and so on, but I'm basically looking at it as a bigger picture to the industry and how could we work together in order to change things. Now, operators' free cash flow is getting higher, so that's a positive thing. And of course, also when you are in a crisis, this inspires collaboration. You need to work in a different way, as Sophie said, different people work together, partner, collaborate, and for the benefit of the oil and gas companies collaborate also with other regulators, with different also geophysical companies. Of course, the collaboration, we know for a long time, it has been around technology. Now, we're looking more around business, so it becomes more partnerships and commitments that we need to see more of. That's going to change the game moving forward. And the third thing, which is extremely important, is that while we were in our crisis and working hard trying to get out of it, in the same time, there was an industry which was actually doing quite well, which is the digital industry, looking into lots of new technologies and machine learning, artificial intelligence, analytics, and huge compute resources, clouds. So in my opinion, these three things could really give us a little bit of an encouragement. There is money in the system. Crisis also inspire collaboration, and also we can take advantage of the technology that has been developed, the explosion, the revolution in the digital world. So for exploration, we all know there are four things: data, technology, and people, and of course the environment, where we are in a regulated environment, and it is encouraging environment. So all of these are important in our collaboration. Next slide. Next slide. So I'll go through now the key things that we're going to talk about, the digital transformation. What are those, representing through this small pyramid where it has the corners, which is people, expertise, data, and also the digital technologies. And when you see data and people would interrogate the data and they generate derivative maps, knowledge, and it's always very important to do that because it gives you integration. Then when people work with digital technologies, they also generate automation. They generate also lots of good stuff, creative. And then the last part between data and digital technologies, you use the machine learning and artificial intelligence, you're able to get insights. So in the digital transformation, we have a way to be able to change the game and convert it into a knowledge game. Next slide, please. Okay, now I'll give you 3 examples very quickly around digital transformation, how this could be helping us. So I'm looking at this as I say, okay, we're familiar with the picture recognition, and there is an example I'm going to show you, which is actually related to the Iowa transportation regulators, where they use and they look at a person, and then they try to find from their repositories, from their files, if this person they know or not. And of course, it goes through a capture, access, and also it goes then at the end at a match and react. Now, we can do the same thing in geology now. I think we've been making some progress into that field. We can capture a feature from seismic. We can then look at other attributes and find what geology look like until we reach to interpret a rock. Next slide. So here is an example where somebody is saying A polygonal faults, we say, okay, maybe this is an indication of, stratigraphy, shale, then, okay, then we're going to look into maybe, we'll go into an article, as Sophie was describing, to go and search for something there on the cloud that is specially designed for that. Find something which is talking about this particular feature, and then after that, try to search for that feature that would go and say, okay, this was in Canada, let's go. It goes automatically search worldwide, and it finds a feature similar in Clare in North Sea, and then it can form a very quick analysis and pattern recognition from that. So that's something that now I think is going to be more and more speed up things, look at for global analogs, and be able to worldwide to look globally on a cloud and try to see what can we do. Now, going from an analog, going now to understanding a geological feature compared to all the knowledge in the world from data and from literature and coming up with knowledge. Next slide that I'm going to show you is a little bit related to interpretation. And the first one about geological pattern recognition, I'll call it that way. And then the second one is around how could we speed up picking. Now, lots of people talk about speeding up of picking of salt and so on, but here I would like to show you something a little bit different, where I'm using data from the US side of the Gulf of Mexico and using that information and machine learning from it, and then use the outcome for the Mexico area. So going to the next slide, I'm going to show you that this was what has been done from the US side. Following this, it goes to the Mexico side, and then you can see that it can automatically, very quickly, able to identify what it is. If you look at the bottom pictures, one on the left-hand side, the end would be the machine learning one, and then the other one would be the difference, and you can find that it has been very, very close in the interpretation. Now, when we come to a difficult place, like the area that's identified here in yellow at the top, that's difficult. That needs an expert interpreter to come in and be able to interpret and adjust this feature, and that's where you're going to need people with expertise, plus also the machine learning. Machine is going to do the things that the people, it's not very interesting for the interpreters to do, so it's complementing the expertise of the people. Second example, or third example, sorry, is related to drilling. So when you're talking about drilling, it's a problem that you all know, that you have a certain model before drilling, and then you start drilling, you discover that the model was not correct, and your drilling is heading in the wrong direction, or you find some hazards or some problems. So here, part of this concept here and technology using machine learning and artificial intelligence to be able to, with the huge amount of computers that are out there, it's not only the size of the computer, it's not only that it is faster, but it can do much more. So then you can do thousands of different scenarios before drilling. What would it look like? What would the drilling could look like before starting even drilling? And then use machine learning in trying to come up with, next slide, to come up with, what would be the model and the spectrum of model that could look like. And then after that, during drilling, you're going to be comparing very quickly. You have all these scenarios, thousands of scenarios. It's going to compare, and it's going to direct to the right place. So that's the third example that I wanted to show you. Now, these are the three examples. Next slide, please. OK, now I go to the global digital collaboration. Now, with all this information, the way to do it, you have to be very clear on having all the data in the same place so that you can make full use of it. And when I say all data, it's all data, like all the oil industry data that could be there. And of course, it has lots of ways in order to regulate it and make sure that everybody is getting what they have paid for and also what they have put effort in. And next one. And these are the different data sets we're looking at: geological models, knowledge capture there, and also different machine learning interpretation, generated interpretation that you can add together. And you can do this proactively, and even before a need, you can use them in comparisons and adjustments later. Next slide. And of course, this is going to be global, so that would help you in finding these features and being able to do these interpretations with knowledge, and also being able to help in your drilling and de-risking them. Next slide, please. Now, last slide for me, or before I tell you the conclusion remarks, is that collaboration, which have been touched a little bit before I talked, is extremely important. This is actually the partnerships between the regulators, between the academia, service providers, and also oil and gas companies. There are more happening. We need to see more. And I think that's going to change the game for our industry by reducing the waste and being able to be much more efficient, where everybody is going to win from that. Now, I put it inside the cloud because now we have also another player, which is the cloud providers, which we need to be in a digital place. And that's what's going to improve this collaboration and make it faster and more effective. Last slide, my closing remarks. You know, I say new optimism. I would say probably we are at the start of an upturn. There are some positiveness going there, but now we need to reinvent ourselves through digital for exploration. So using experts in doing the really things that need expertise, and then the rest would be only for machine to do it, and you don't need to do the heavy lifting part. And then the analogs used to digital, also geological interpretation. And in the cloud, you can do things not only faster, but you can do it, efficiently and also much cheaper. Now, full transparency and accountability. So people, it's all documented, it's all there. If people even leave, it's still there. You don't lose expertise when people leave. And at the end, I would like to say, the future is in our hands. I believe that working together very closely is going to change the game. And I think we should not put lots of effort, waste time in searching for all these things, which is data and others, and put the effort in finding more oil and gas. Thank you very much.
Thank you, Maurice. And last but not least, to wrap up our panel presentations, is Erik Finnstrom, the Senior Vice President of New Ventures at TGS.
Thanks, Nikki, and thanks for giving me the cleanup spot in this heavy-hitting lineup of industry leaders. Some great talks. I'm really happy to be able to be here and talk about TGS and how we actually did make it through the downturn and made money all the way through. And who is TGS? We do like to say that we're the world's largest geoscience data company, and that can be defined in a lot of ways. We also pioneered and developed the so-called asset-light multi-client business model, where we do multi-client projects without our own vessels or hardware, but charter those from our good collaborators here. We've built a vast global multi-client library. You can see it on the map there through this model. It's very strong in the northern Atlantic, as you can see from the red density there of our mainly 2D there. 3D would be the yellowish polygons. And we're building in the southern Atlantic, as you can see, and also strong in Australia and somewhat in Southeast Asia. The purple dots are the which I'll come back to, well log data sets that are extremely dense and industry leading in North America. And we came together as a company by merging two companies, TGS and NOPEC Geophysical, an American company and a Norwegian company, and that still characterizes us today with our main offices both in Oslo and Houston. So let's go to the next. I think it's important just to say who is TGS to talk about our values very quickly. Values characterize an individual and also a company and the way you will be able to relate to them. So if you look at the disk on the right-hand side, you can see that we are always responsible to our customers. We are always responsible to creating value for our shareholders, and we do not have the vessels as an asset, we have our employees. And again, finally but not least, responsible to our communities and the environment that we work in. So I feel this does characterize TGS, and you see our management team on the left, which I think is a very diverse and flattish team, and really defines the way we work. So let me talk a little bit then about the general problem that the others have addressed, and I think this is maybe another way of looking at it, but kind of pretty much the same thing. It's an example from Brazil, and using the Libra field, which is the largest, one of the largest offshore oil fields ever discovered, and looking at the costs involved in this value chain. And what is at the beginning of the value chain? It was said before, it's seismic. I would venture to say that no offshore oil field is found today without seismic. So that's the beginning of the value chain. We have bidding, and this is an example of the highest, one of the highest bids ever placed on one individual block that was also done in Brazil. And then a typical cost for a complicated deep water well in either Gulf of Mexico or Brazil. So you can see that the costs of the associated activities really dwarf what it costs to do a typical investment in a typical 3D data set, let's say in Brazil, leading to a value which I can't necessarily say this is the correct net present value of Libra. I think it's much greater than this, but it certainly isn't less. So I think this defines the problem in a way, or illustrates the problem that we face, and the others have spoken to, of seeing the value in what we're doing. So TGS, it was mentioned that we did make money through the downturn, and that is a fact. And how did we do that? How did we address the downturn, and why did that work for TGS? It is basically the asset-light model. We, as a company, have no debt. We, very importantly, as I've said, did not have any vessel ownership, which meant no long-term commitments for the company. And also it means that we only base our decisions on a project basis, purely commercial, and not doing group considerations. That's led to a very strong balance sheet for the company that we've carried through that downturn and into today. The other thing that we could talk about is as I said, the flat and very flexible decision process. And if we look at the right-hand side, through the downturn, defined through these years of 14 through 16, these are indications of the very quick and you could say tough cuts in our investments and cost structure that were done extremely quickly and across the board of all of our expenses. And what that did allow us to do, if you look at the bottom right-hand graph from 2007 to 17, you see the cash flow in the bars positive through the entire period, and the sort of cash out and cash in the blue, cash out in gray, always maintaining a positive gap there. And even at the very tough and dramatic drop through 2015 and 16, still maintaining a positive cash flow. Again, because of the asset light and quick decision making. The other thing that we did at TGS through the downturn is to work counter-cyclically. And the setup of the company allows us to do that. And what you see here is the geophysical data that we've invested in, mainly seismic, from 2007 to 18 in this case. And the different colors indicate the different types of data. And you can see it's normalized to the year 2007, so 100% there, and the others indicate more or less compared to that year. And basically what you see is that we've, through the entire period, regardless of the upturn or downturn, invested more in general from 2007 and brought in more, actually not more money, but actually brought in more data into the company. So even through the downturn, we're at about a level of twice what we were in 2007 through 2009. So it set us up really, really well for hopefully the upturn. Some disagreement here about that, but I think we also see some indications that we're going that way. And we do now have a larger library acquired at a lower price as we were able to invest through that downturn. Then just to summarize we're proud of what we were able to achieve, and what we have returned to our shareholders is superior return through the period. On the left-hand side, you see it for 15 years, actually, which characterizes the company very well. A 16% return through that time, beating Standard & Poor's by a double margin and really crushing the competition here in the chairs. And through the last 2 years, the same picture, although not quite as dramatic, but still a very good return for our shareholders. And again, the sort of aspects of the company that we feel enables this type of performance on the right-hand side. So that is very quickly going through what TGS did to create value for its shareholders in the downturn and to keep the company really above water, so to speak. Going forward, as I said, we feel we're in a good spot. We're hitting the upturn with momentum. And really, to talk about what we're going to do going forward to capitalize on this is basically our strategy. This is the strategy that our CEO presented to the board of directors, and it's been presented at our Capital Markets Day. So I'll give you a very brief run-through of that. And it's 3 pillars: profitable growth, maybe focusing especially on onshore investments. I think I did forget to say, can we just go back one more? So that you see the different colors. We started investing in onshore or land-based seismic in around 2011, diversifying the company's portfolio dramatically at that time. And I think that as we look ahead from that time and see what's happened, the onshore North America, that was a very wise decision by the management at that time. So let's go back. So looking at what we're going to do going forward, growing our investments, again, still in North America onshore, but also the South Atlantic, which I'll come back to. And as has been said by others, capitalizing on our big data position, using analytics and machine learning to create more value for our customers. And finally, the final product that we actually provide to our customers is the image, the final image, the final seismic image. That is what actually, when they look at that, that's what they think about or associate with TGS in that case. We need to continue enhancing the quality of images that we can provide to our customers. And you can see what we plan to do to do that. So South Atlantic growth. Why focus on the South Atlantic? Well, it's a prolific set of basins, both on the South American side and on the African side. You can see our current library with the blue is the 2D library, and the reddish polygons are the 3D, or orangish. Red are the areas where we intend to be developing our business, especially focusing on the proven and prolific basins. So you can see on the African side, Northwest Africa, into the Gulf of Guinea, and into Nigeria and also Angola, and on the South American side, Brazil and Argentina. So if you then again focus on the blue and the seismic library that we've depicted here, and if you now click again, we overlay. Oops, that was too far. Yeah, we overlay the new acquisition that we've done, acquiring Spectrum Geophysical, a similar company to us, a multi-client asset-light company, but much smaller. But Spectrum has created very quickly and aggressively an extremely prolific library here in the South Atlantic. So you can see that this really creates a ribbon of data for TGS all the way around the South Atlantic, especially on the 2D side, that will allow us to further develop 3D projects much more effectively in our focus basins. Okay. So onshore, this is what we've done since, like I said, since 2011 to diversify our portfolio. what it does give us is something that is much lower risk. People have talked about risk here. Clearly, some of the projects we get involved in are very risky. These will be much lower risk, and these will have companies that want to fund to almost 100% level in advance, which also helps our portfolio. The other thing, well, we've established good 3D coverage through the premium basins, the Permian, the Scoop and Stack, the Powder River in U.S., and Duvernay and Montney in Canada. So the other thing to notice is the sort of the greenish, light greenish cloud underneath all of this, going up the center part of North America. That is actually individual well data points that TGS have in our library. So we have a really great combination of clean well logs across or through North America, together with good high quality 3D that will allow us to characterize the reservoir for our clients, as well as to begin working on AI, which has also been mentioned. So, and why AI? If we look at the offshore marine seismic world, this is a plot, I think, created internally of how much, in the blue, how much data per shot has been acquired offshore through time from 1970 going forward, and then in the gray, sort of the complexity of any one project that an interpreter would be working with. So that you can see from about 1985 and going forward to today, the amount of data that we acquire per shot on a marine seismic survey is increased by 30,000. And if we look at the amount of data that any one interpreter or project has in terms of cubes or types of data, we're saying that's about a factor of 70 to 80 times more today than it was in 1985. So the complexity and the volume of the data in offshore exploration has exploded. And if we go to the next one, the perfect thing to take care of that is AI. We think for TGS, this is a future important area of our focus, and that we're very well set up to be working that. This is what I call the sort of the holy trinity of AI. You need these three things to be successful. You need the algorithms, obviously. You need the data to learn, to teach the algorithms, and you need powerful compute. And TGS is well set up to be able to work in all of these areas. Yes. I think I lost a slide, but that's okay. That was one of my best slides. Darn it. I think it got hidden. Okay. That's okay. I'm probably running out of time, so we'll go forward. This is where we are intending to go to interact with our customers. It's a representation of a website, a simple internet website that will contain entry points for our customers to get in and work with our developed solutions and products within AI, within computing, where we'll be intending to collaborate and share computing power with our clients, and within data management, where we hope that the work that we've done in creating our own data lake will be something that we can then leverage on to help our clients going forward. So then I'll go to my next to last slide. And this is what I was saying is what characterizes TGS and really all of the companies delivering data to the clients is the image. The final quality of that image is what our customers look at and say, we're happy with you or not. So we will continue to drive the technology and continue to do research and move also towards, especially onshore, the reservoir characterization field and providing our customers with the information about the rocks themselves. As was said, we know that it's really important to get the customer to help us to define what it is they need, so that client focus is something we will continue to develop. And finally, compute, as was mentioned, is a key enabler. What we have done to date is not to explode our compute capacity, but to keep it in pace with the work that's coming in. And I think we see that the cloud is the way to go in the future. It's not there today for us and probably not for you in terms of your complete computing power. But going forward, and that may be something we talk about in the panel, this will probably be something that will allow us to keep our compute capacity at the same level as the work we want to do. And I also wanted to show some seismic. So here's one from our library, a 2D line in the Gulf of Mexico that's showing a salt body and some unclear reflectors underneath. And what I'll do is go through and kind of just show you how seismic technology has defined this image going forward. So that's a 2D line with something going on, Gulf of Mexico. Let's go to the next one. And then this is more or less the same line with that salt body, very well defined. This would be on a 3D line, narrow azimuth, not wide azimuth data, but with higher level of also imaging. So now you can begin to see the layers and the dip, the true dip, and the structure underneath the salt. And then finally, the last one here is a wide azimuth with the complete toolkit of FWI has been shown, and the most sophisticated reverse time migration, really defining very clearly what is happening underneath the salt and adjacent to the salt. Finally, one last click on this one, just representing that the ultimate goal, and we may talk about that in the panel as well, will be to go beyond the image and to characterize the reservoir through the work with the seismic and the wells, which I'm representing there. So one last slide. And really coming back to then this slide that I used before to wrap up the session is this is what we think we provide as seismic companies that acquire seismic and process and image seismic and get it to you as customers. We provide a tremendous value lift to you and enable you to, when you invest upfront this relatively nominal amount, you have the possibility of making these tremendous gains like you've done, or some companies have done at the Libra field in Brazil. So thanks for your attention.
Thank you, Erik, and thank you to all of our panelists. I'm going to continue to sit over here during the panel session, but now comes to our discussion part of it, and we kind of hit on some three main themes, which is technology, people, and environment, and the questions actually kind of follow that theme. And then finally, what's needed for the future as our industry looks to continue to be successful and continue to provide the efficiencies that are so necessary for the exploration and production industry, which involves collaboration and partnership and continuing to advance technology and people and the environment. So first up, I'm going to turn to Rune at the first question, but just a side note, later in the panel discussion, there will be an opportunity. This is something that OTC has introduced this year and have, if you've attended other panel sessions, have been using, and that's a audience response system. So we will use what's called Poll Everywhere, and it's an instant-based audience internet-based audience response system, and a question will display on the screen, and then you have the opportunity to vote using text, using the app that Alex mentioned, using a web browser or Twitter, and then once the polling concludes, you'll see the results of that on the screen. So we've put a few questions throughout this discussion so we can kind of see where the audience is on a lot of these topics as well. But you mentioned that you like it, the part of PGS R&D strategy is to control the assets, so you feel that helps a lot in advancing the technology and the interest you have in research. Emerging technology is a hot topic at whatever conference you attend in the industry right now, and it's disrupting the status quo. But do you feel that we're capturing that in exploration and specifically in our industry, in the geophysical and seismic industry?
Well, I think it's clear, both from some of the presentations here, I chose to focus on it, and also from the other companies and what I know they are doing and what we are doing, that within oil and gas, I think the seismic industry is probably the one moving quickest in this area. And maybe that's natural. We are, as Sophie said, all our data has been digital always. We invented big data in a way, long before anyone else knew what it was. I think that what you will see over the next years, it will change almost everything we do in the seismic space, all the way from how we acquire data and the efficiency we will have in acquiring data, whether it will be by vessels or by OBM, to how we store it, how we interpret and process it, and also perhaps how we sell it. Because obviously when data is in a new format and there are new possibilities to showcase it to the clients, you may have different sales models of data being in the, at least from data from the library. So yes, I believe we are taking advantage of it. We are in the beginning of it, and some maybe more than others, but I think we're just scratching the surface of what we will see this do to our industry over the next, I don't know, what should I say, 2 to 5 years. So I think this is quite exciting, and I agree completely with both Sophie and Maurice that, and Erik, that spoke a bit about this and the optimism that this provides for the geophysical industry. So I guess I said yes, I think so, but there is much more to come.
Yeah, that's good. That's encouraging. Because we have taken a hit in our annual R&D spend. I think one estimate is $100 million a year in annual R&D spend that was suffered during the past few years. Sophie, while exploration budgets have shrunk, where are you seeing the most value? Where would you like the geophysical industry to focus its R&D spend, specifically at CGG, Sercel, and then the broader industry?
Well, I mean, I guess it's just to make it simple. We're going to focus our R&D to where we can make money. So unfortunately, like we've seen in the acquisition business, it didn't allow us to make any money. So obviously that money is going away. So we're definitely, and that's why we refocused on those 3 businesses where we think we could be differentiated and successful. In fact, we certainly as a whole, the money available to R&D is shrunk, and in our case, we kind of shrunk it in a way proportional to our business, but we've kept investing through the downturn. Actually, not just the R&D money, more importantly, recruiting the people, because at the end of the day, what will make the difference is our ability to attract talents and to develop talents in the industry. So where are maybe the quick wins? I think is definitely the processing, improving that quality of the image is so important, and it is going hand in hand with different types of acquisition, more data density, different types of data. I was mentioning the nodes. The concern I have, if you think nodes is maybe that next frontier that will improve substantially the understanding of the subsurface, those nodes acquisition company aren't making money. And that is a big concern to me, because our industry needs that data acquired in order to, improve that exploration success. So, I mean, I don't know because it's not in my hands, but we need those nodes acquisition company, I don't know anyone is here, to be successful in order for us to improve that understanding of the subsurface. I think, again, rethinking the workflows and taking that workflow from the seismic data to reservoir understanding and reservoir characterization directly without going through the steps of the imaging and the immersion and this and that, I think is something that I think will be useful and help the cycle time. Now, hand in hand to that, we need to continue improving our equipment to be, improving the data quality and, allowing for those algorithms to extract more value out of the data.
Erik, Sophie mentioned this, it was reminiscent of Schlumberger CEO's remarks last year when WesternGeco got out of the acquisition business, that there wasn't a differentiation amongst the clients, amongst the customers of technology. You are both a customer and also a provider of data licensing. Do you agree with that statement? And do you think in the broader industry that exploration companies have the pool to make and prioritize technology where it's important, or is cost the predominant driver?
Yeah, I mean, I do come, as you said in the introduction, from the other side of the table to this side of the table now, and I've experienced both sides. But I have to say, from my time in Statoil/Equinor, my philosophy was that the more seismic we could get in of high quality, the better it was, and that was always my push inside that company, was to increase our seismic library, so to speak, in our prioritized areas. When we looked at our process that we created to figure out what we were going to buy, we in a way brought together every idea we could find and put it together and costed it. And ideally, it would be over $1 billion of exploration spend that our geologists and geophysicists would say they wanted, and they really wanted it. And then you had to bring it back down to something that you could handle. But and if 1 year that spend level was something like 700 or 600, we were actually quite worried because the ideas were not coming. So basically, what I'm saying is that I think that exploration companies need seismic, quality seismic, and lots of it to succeed. Being now on the other side of the table, I see some companies and have traveled around the world in this year and spoken to many, many companies, big and small, and international and domestic. And I think some of them get it, if you want to put it that way, and others don't. And that there's varying levels of understanding through those companies and the executive management. And I think we somehow need to break through and help them with that to continue to try and show the value generation.
I think this is a question probably later that I had, but since you just brought that up, how do we do that, Erik or anyone else? How do we break through to those companies who don't get it?
It's difficult. I think it has to be done at an executive level. We talked about it in Statoil, Equinor, explaining at the very, very highest level what is the value of seismic, and doing like little seminars and trying to get that time in a very busy schedule to those executives and getting that message across, because some of them really, I think, in some companies just don't ever get that knowledge. So we need to try and break through and get into the boardroom or to the executive room and do those little seminars, basically.
Maurice?
Adding to what Erik said, and I think that's lots of real good information, because he can saw it from different angles. But I believe, that the exploration companies, not all of them, when the downturn, when they've been suffering a lot, I think they have given their exploration keys to procurement. So when they gave the keys to procurement, I think they are still keeping it. And they are unable now with the ability, with having the money and being able to spend. Because I think when it's very true, when you don't have enough money and you have to drop the price really hard and you have to put pressure on all the different providers. But I think when now there is money in the system, and I think there is need, and there is, like the service industry is in crisis, I think it's a good time now to get the explorationists and the real end users more engaged, and of course with the help of the leadership in these companies.
Rune?
Yeah, I of course agree with what has been said, but I also to give a little bit of reflection. I think we are returning to a more normalized stage when it comes to acquiring seismic. I must say, at least my perception was back in 15 and 16, we had the sense that as long as the seismic was cheap, that was basically the only thing that mattered, because the budget was so slashed that, we just wanted seismic because, and we needed it to be very cheap, and doing multi-azimuth, wide-azimuth really was not on the agenda. It was just too expensive. I think several companies are getting back to a more of a normalized way of thinking that, okay, sometimes cheap seismic is good or enough, and other times we need more and more advanced seismic, even up to a node or more advanced streamer seismic. So I feel that there is a glimmer of hope, and in particular in some companies, that we are in a way returning to a more sensible spend, and maybe they're taking the keys a little bit back from procurement. I wouldn't overdo it, but in a way, there is a meaningful change between some of the feedback we're getting from our sales team and the people out there trying to promote, a certain way of shooting seismic over an area which was better than the other, and just that may be so, but we can't afford it. And now it is more of a dialogue along those lines. So I actually think that our clients will return to more of a sensible seismic spend, where also more advanced seismic will be on.
I just wanted to add something there, is that what the downturn has done to our clients is forced them to prioritize. So there's that, okay, shrinking, instead of doing 20 different things, let's look at 10, which is the first step. Then together with that, there was this good enough mentality, let me do the cheapest I can do. And I think what will tell is the success, right? Eventually, I think now 4 or 5 years into the good enough, a number of clients are starting to see that good enough is not good enough. And therefore, to your point, I think we're seeing a little bit of adjustment. So we still remain the focus instead of spending, probably the exploration budget is still about half of what they were. I see Julie Wilson over there. She might be able to say that. But let's say, let's say they're half, but at least within that focus, I think the quality of what is requested and required by the client seems to be on the way up, which is encouraging for us.
Duncan?
And for our employees, right? Because that good enough has just been depressing, I have to say.
Yeah.
Sorry, Sophie, but I was just going to say, I think part of the paradox that Erik and Maurice both mentioned is that some of those companies that really get it have actually got the best procurement departments in the world. That's the issue that we face. And I think part of it is, for us as an industry, is to do what all of you or all of we've spoken about and actually demonstrate value and actually sell our wares on value, not on cost plus, which has been a killer for the last 5 years when we've sort of had to. But that's the companies that get it do have the best procurement departments, and we need to show them the value.
Yeah, and Erik, I love that slide that Erik had. I saw Christian present it before in front of a similar group, but it's a good demonstration of the value proposition of seismic, that for such a nominal cost, look at this tremendous production asset you have on the other side. And this was probably your smallest expenditure of the entire process, yet it's the first to get squeezed and cut, which is incredible.
It's so unfortunate. But, and again, going back to my old days, we were very concerned about generating ideas. Ideas are the things that end up in Libra in the end, and you have to have lots and lots and lots of ideas, because they begin and then they filter down to something that's tenable. You don't generate ideas without the data. You must have new data, and that whole philosophy needs to be, somehow put out there and explained and promoted.
Yeah. But the trouble is, ideas don't always make money right away, right?
No, it takes time
Yeah.
and process and patience and all that, but in the end.
Yeah. So Duncan, going back to you, kind of continuing on this topic, we heard a lot earlier this year. I know you are individually hearing a lot from your customers, a pressure to reduce cycle time. We want it faster, better, maybe cheaper. How are you doing that at Polarcus, and what is the increased investment required to do that?
So it's not to do it cheaper. It's actually to make all of us realize how important time is. I think we've all here mentioned time and reducing cycle time. And I think, to pick up on one of Maurice's comments, you may think that we have a pretty small part in it, but I think we have a critical part in it, and that's getting data from the assets that actually acquire the data to the right spot, to the right people as quickly as possible. I mean, it's trivial sort of numbers, but I can remember when we first launched Polarcus in 2009, we were very proud to have 512 kilobits per second coming off the vessel. And now we've got in excess of 20 megabits per second coming off the vessel. Very, very different. So we're looking at how we get the data off. It's looking at how we package the data to get it to the right spot. But I think also with our ANP friends, it is the interface between us and our customers that Rune and I were talking about earlier. That's where a lot of this time gets sunk. And in our, whatever you might want to call it, 2 years of that 7, some of that interaction and how we, whether it's sell the data, but how we make the decisions and how we use that technology to make the decisions, I think that's some of the low-hanging fruit. So we're working on our part of it. These guys need to get their act together and make sure that they can contribute as well. And then I think for the E&P companies, we'll be in pretty good shape. But I don't know if you guys want to add on that. We are only a small part of that, but I think, Maurice, it is collaboration.
It is. And I think, collaboration and actually taking it a little bit to partnership, that's where we historically have been doing collaborations with oil companies, but it was all around technology and limited technology. I think now being partners means that we have a commitment. Multiclient is a very good example where everybody wins. The oil company win, the service provider win, the regulator win, acquisition companies win, data processing companies win, and that's what needs to happen in a way that doesn't involve too much greed in it, where we try to make the wins equal, not to make someone win much higher than the other. But in the same time, we are, like our industry is well known, and I think probably is the most competitive business in the whole world. Like we are extremely competitive between each other, even when we are partners and we are working together. We are very competitive. But at the end, this competition is for the benefit for our clients. And when we partner, also the same thing. We partner for the benefit of the client and complement each other. And I think that's where now things are starting to develop in a little bit specialization, where could be some, like Rune, in his case, he has an integrated offering, but in lots of the other cases, it could be complementing each other to come up with an integration, but not through a single company. Mm-hmm. And that also is a good business partnership model.
Mm-hmm. Anyone else? How are we already adding efficiencies?
I mean, I think everybody here is probably that's processing and imaging data is working on trying to do that quicker and become more efficient on that side. And if you look at an example from Brazil, say that a typical, let's say, a 10,000 square kilometer 3D might take with a good acquisition season maybe 6 months to acquire, and it's still going to take us a year to get to a final, more or less, product. You can spin out other things quicker, but a final product that you say this is the end product takes double as long to do the imaging as it does the acquisition. So I think that's a place where all of us will be working and trying to use some of the new techniques of machine learning applied to that process to cut out waste, cut out, honestly speaking, people's time, cut out duplicative things, and just try and speed it up as much as possible.
Mm-hmm. Maybe might be a bit incorrect politically, but I think a lot of yes, we're working on that. We're going to shorten the processing time. First of all, I agree with Maurice that said that multi-client is a great way to become more efficient, because often multi-client gets done ahead of the bid rounds, for example. So when the clients actually acquire the block or the position, the data is already there, which is the best position to be. You've already, just by doing that, gained at least 3 years, 2 to 3 years in the cycle time. So that's the best model, and that requires collaboration and maybe an enlightened regulator that understands that and pushes this acquisition to happen ahead of the cycle, ahead of those bid rounds. But I think a lot of the efficiencies should be coming from those maybe procurement discussions, because very often we start talking to a client about a need in January of a year. and then it finally gets assigned maybe a year and a half later. And of course, when that gets assigned, it needs to be done within, like yesterday. So I don't know how we solve that. This is maybe looking at the entire cycle, and the cycle doesn't start for when the contract is given to the service company. It starts when the need arises within that oil company. How do we make sure this whole gets squeezed up? And I think there's a lot to be gained in the environment itself.
I think that's a good note. Starts when the needs.
Yeah, and often we get squeezed, and I kind of get efficiency within, say, processing, because for us, most of the processing efficiency gains have been reinvested for 12 to 18, and we do more things.
It's in that time.
Can generate a lot of value. And I think from the oil company perspective, I think it's very important to acknowledge and to encourage the geophysical industry by being able to have this reflect to them in the discussions, the trust and respect, where there is lots of investments that's there. These investments have to be well appreciated, and then you have some sort of return on that investment. So if I'm an oil company, would be to have a sustainable business is to make sure that the service providers are winning and are also successful. Not to be happy that they are not making money, and and that would be a success. It's not. It has to be a win-win. And I think moving forward, that's going to happen. We're seeing lots of positive feedback from the oil companies that they are seeing this, and now they can have these discussions. And I don't think, from our side, there is more than only, my advice would be to ourselves is not, not to eat more than you can digest. Be focused and and be able to invest in the right place, have a collaboration in your also organization to move forward. So that's what I would say.
Yeah.
But I mean, just to be, a simple way of saying that also is that we can't necessarily have sustainable growth in a cyclical industry. I mean, even our good friend Erik here, who told us all how much he crushed us over the last few years. It wasn't.
By the way, that's what he thinks.
Exactly. Yeah, I know.
Numbers speak for themselves.
But even that fantastic performance that I really pat Erik on the back for, that is not sustainable growth through a cycle. I mean, we are going to have to be reactive. We are going to have to be agile. We're going to have to be flexible. And that's different for different business models. So I completely agree with what Maurice says, but there is a reality that growth isn't going to be stable over a cyclical industry. We have to be reactive. And that's part of the fun and the pain, I guess.
That's well said.
And one of those things that has to be stable, turning to the audience responses, is a workforce. And this is a point that you mentioned, Duncan, earlier, and that we discussed in the speaker's room earlier, which is a big concern. We're seeing less and less young people pursuing petroleum-based education, especially in the West, and there's a real concern about the ability and availability to recruit from to backfill a lot of the experienced workforce that is retiring. So how do we address that? What are you doing at Polarcus to address that? And what is your hope for the industry and how we ensure that there's a stable workforce for the future?
So I think I mentioned we have had an amazing response from graduates in terms of the focus on the environment and actually trying to see how an oilfield service company can do and contribute constructively. But I think the two things that I would say before I let some of the other guys add something to that is one, I think, again, I mentioned briefly, but collectively we need to actually promote the good of the oil and gas industry, and whether we decide to call it the energy industry or whatever, however we try and wrap it. But it's a very responsible, very important part. And I think Erik or Maurice actually mentioned the big opportunity I think we have is exactly this whole big data discussion, because that is pretty exciting stuff. data manipulation, and this is the source of data. So I think if you can sell the industry and attract one of the most challenging issues that we have on utilizing data to help our clients get to a decision for the benefit of all of us eventually, I think those two things would be. So tap into the information, the data brains that we have out there and coming up, and actually sell ourselves as an industry.
Mm-hmm. Anybody else want to add to that?
I could jump in. I mean, I just go a little contrarian to this the poll here. I do agree with the experienced workforce issue, but I think if I'm going to pick another one, and maybe even I think ahead of that would be the one that got the least votes here, was the government and regulatory climate, and what we see as geophysical contractors in terms of difficulties in getting the permits, as we've spoken of regulations that, you know, maybe don't make sense all the time. And then we see also nations banning, stopping exploration for hydrocarbons, but still using hydrocarbons, obviously. So there's a global movement, it seems, towards a much tougher look at what we're doing, and really maybe not looking at it, at least from our viewpoint, in the right way. So I think that wraps up with the kind of education of the globe and the consumers of what it is we're doing and what we're providing and what's actually truly needed that you addressed in the opening a little bit.
Yeah.
So I think this is a critical issue for the industry.
And you are now my favorite panelist for saying that. But pivoting off of that, the next audience question, actually, and maybe it's because there's a lack of information or understanding unless you're in it and you're struggling trying to get the permits, but has there been progress or setbacks with governments allowing, and it says 3D, but this could be really any seismic surveying permits, and so we'll let and I agree with the first, but it probably depends on where you're looking. But I'll turn to Rune, and this is a point we make often, that we have all these factors that make exploration flourish, and certainly seismic flourish, and that's based a lot on companies' cash flow and whether seismic budgets are increasing or not, but it also depends a lot on whether there's stable, reasonable fiscal and regulatory frameworks in place. And we know that the overall attractiveness of a geological play is important, and that's us, that's the work you provide, but also where these policies are supportive, reducing above ground risk. But we are increasingly finding, Brazil was mentioned a few times, and I wouldn't say it's the most stable regulatory climate. So we still see that explorers are aggressively going after areas where there's a substantial amount of above ground risk. How much does that above ground regulatory risk specifically factor into your exploration decisions, and how are you addressing those risks?
Well, this is, I would say, a particular topic for multi-client business, basically, where we generate the prospects and we take the investment risk, you know, maybe with some pre-funding, but normally with where we take risk and put it on our balance sheet, and where above ground risk can, you know, a coup or a 5-year extension of the license round would kill that business model very quickly. So this is a very important part of any de-risking of any multi-client project, and obviously more importantly in certain countries of the world than in others. But so to answer your question, it's very important. And what are we doing about it? Well, we obviously try to understand it as much as possible. We have people on the ground. We try to understand the political situation. We follow the, you know, election routines and things like that. And we also try to influence it, to put it that way. We work with many governments on educating them on what is a meaningful licensing regime, what is important for the oil and gas industry, you know, and thereby what is important to attract foreign investments into your country. So we, on a regular basis work with several countries, explaining to them the importance of predictability in terms and in licensing rounds. And we go as far as assisting them in actually holding the first licensing rounds and things like that. So this is obviously a huge issue, and everyone who has a meaningful multi-client business will agree with me, I'm sure.
I'd just add just a little bit of unashamed promotion of Polarcus. I mean, I've got 3 potentially very big clients here, and maybe one day, Rune, I can help you out with some highly efficient acquisition. But in all seriousness, we do help our clients, and we're just moving into that service space where we're working more closely with some of the pure play multi-client companies. But we have worked with TGS, we have worked with a number of our clients to assist in that process, to understand what we're doing, particularly some of the frontier regions. They want to know what the hell is happening with bringing a vessel in, so we work quite closely, so we can help you out.
Okay.
But
You know,
in
terms
those
of
frontier, go ahead.
Yeah, I was going to say on the above ground risk,
Yeah.
I think it is predominantly the role of our clients to understand that. So in general, we tend to position our multi-client survey where there's client interest. And of course, we do have to worry about it and have our own view of it. But very often is we end up being driven by, the client's assessment of the particular risk reward or risk benefit of a given country.
And certainly in frontier regions, you're the first presence of oil and gas, whether it's seen that way or not by the seismic company, and whether there's client interest there or not, often you're the first presence. And so part of it is like what Duncan was saying about attracting new talent. We got to sell the story. We got to sell our industry and tell us a greater story. So Erik, what do you see, if any, as the seismic industry's role in that? And is the industry broadly, more than just the seismic industry, but the E&P industry, how are we doing at telling that story and showing the world that we are necessary, that we are sustainable, that our impacts will be minimal, but we are actually providing a very beneficial service that's lifting the world out of poverty? Loaded question.
Yeah, it's a tough question, and I think that at least some of the major oil companies are trying to do this, and we see the things published by Exxon, by BP, by Equinor about I think you used some of the statistics potentially in your talk, right, of the production gap, or I think maybe Rune had it as well, going forward, and that's very well-founded statistical predictions on population growth, on growth of transportation needs, of growth of energy for the people in the third world. And we know that we need to explore for hydrocarbons to fill that gap and to use hydrocarbons to fill the energy gap and to fill the sort of quality of life gap. Mm-hmm. And but are we getting that across? I know that maybe I'm going to be a little controversial. The big companies have published the reports on this. The statistics are there, and sometimes they'll present it. But what are the big companies doing? They're actually branding themselves as renewable energy companies to kind of mitigate. And it really isn't helping the story, I don't think. So yes and no, I guess, is the answer.
Yeah, and one of those quasi-frontier regions where we may feel it's up to the broader industry to make the pitch and ensure that it's open is the U.S. Mid-Atlantic, where noticeably was left off of your map of where TGS has acreage or has data over acreage. So
yeah, nobody has.
Nobody does.
No.
We're trying. We're trying. I think Bo might be in the audience, and there's my gentle nudge I promised I would give. But it's an interesting dynamic and interesting challenge because I think it really takes the entire industry effort. So I want to go to one final audience question, and this kind of goes back to what we discussed earlier in the value proposition. And this could be, if you are a client, you can say, yes, I understand, and if you're not a client, you can make your opinion of that in this assessment of this. But do clients understand the technology, and I would add even the value that's utilized in seismic surveys?
Lots of service providers.
You see how many people are here, assess who's actually making these votes. But we've already kind of covered this, but Rune, if there's anything else you want to add here on, we've discussed that often clients don't understand the risk and capital investment our industry undertakes, and the value proposition of it. So what is your approach to helping clients understand what you do and its value?
Yeah, no, first of all, I think many of the clients we meet understand the value of seismic data. At least, many of the large ones, they understand the value of the seismic data. I guess where I felt there has been not so much understanding is the cost and the effort it goes into acquiring that data, and therefore how much we actually suffered in the downturn. To kind of go back to Maurice's point here, it's that I think is only dawning upon our clients. But what do we do with it? I mean, we obviously do what probably we don't do anything more specific than anyone else. We interact with our clients on every level of their organization and try to explain what we do and why we believe our technology and seismic technology is valuable to the client. And it goes all the way from me talking, which is not very scientific, down to to workshops where you show data and data examples and things like that. And I'm sure my peers do the same, so that the clients can look at the different technologies out there and assess it to the best degree and apply the right technology to the right problem. But it's an uphill battle all the time, clearly, to make sure that we get our message across. And communication is the only answer I have to that, I think.
Yeah, keep reasserting that value proposition. Well, I'm going to have one final question for all of you and open this up to everybody, but let Sophie lead here. This is really wide open, but where do you see the seismic industry in 20 years? What does it look like?
Well, the short answer would be I have no idea. But I think the track record of the industry to predict the future is pretty bad, so I will not give it a try. But I think certainly I believe in trends like Maurice was saying, specialization. I think it's been so hard in that acquisition market that I believe that if you're focused at certain things, you can maybe do a better job than when you're trying to do too many things. So some level of specialization, and maybe PGS hopefully will be successful with that integrated model, but you're kind of the last man standing with that model. I think there will be a lot more collaboration, and possibly what we deliver to the client will be quite different. So saying like we deliver maybe images, and maybe we'll be delivering something different to support this shorter or exploration cycle or shorter cycle time, which is not just for exploration, it's for development and it's for production, because it applies also to the 4D and other parts of the workflow.
Maurice?
As Sophie said, it's quite difficult to predict, but I think, what I would see is that there would be probably one pool of place that would have vessels that would be all the vessels in the world managed in a different way, managed in a cloud way, in a way like Uber, where the different users, the different, people that needs vessels, they would call and there would be a queue, and then, we'd use the technology. You have different levels of vessels,
So you want a monopoly, Maurice?
No, absolutely not. I'm only seeing that this would be what makes sense. And then the same thing is going to be on the other technologies, which would be like, data processing in big scale on clouds that would, there has to be something in the future that would be much different, where we become more practical, where you have like the industry have changed in the transportation into something which is different. I think probably there would be something also different. But going from that level downwards to maybe something more, more realistic, closer to what could happen. I believe that the seismic business is very, in my opinion, is, this is the only way to be able to do exploration. You have to have seismic in order to understand the Earth. Actually, in my opinion, it's going to be a much, much higher need of seismic. There is going to be, this is going to be exponentially, it's going to go, the demand is going to go high level because it's not going to be only easy seismic. There's going to be much more complex that need to be resolved in order to find more oil and gas and discover more. So there is going to be a huge demand in seismic moving forward. I think this is not going to be in 20 years. This is probably going to be in maybe 2 years. And then we're going to get into the possible greed cycle, where the different providers of seismic is going to increase the price significantly because the demand is going to be very high, and then the oil companies are going to be upset, but they have no choice. So then it's going to, until the other cycle come back, and then the same thing happen, where this vicious circle, in my opinion, has to be broken, and the only way to break it is through partnerships and collaborations, and being able to work together to try to look at the prize, which is finding the oil and gas, and we can be an accelerator for that. So I think that's probably going to develop over the years, but the demand is going to increase significantly. So people that having vessels are going to be probably very rich, and also for the people that are so giving them a boost after.
Thanks, Maurice.
After Erik have crushed everybody.
That makes up for what Erik said before.
Yes, I'm trying. My colleague, my asset-light colleague, will. And I think for multi-client, it's going to be the way forward, and there's going to be lots of need for vessels and also for nodes. That's going to be also in the multi-client world, because it is a business model that is sustainable. It is something that would be a win-win for everybody. You cannot, each one has, I give the example of going to the airport. Each one would have his limousine to go to the airport. You have a bus that can take everybody. It's much more easier, cheaper, and it might not have to be too convenient. You have to wait a little bit, before getting in. But at the end of the day, you're going to reach, and it's going to be a good experience, safe and everything, but it's going to be very efficient. So I think multi-client is an amazing opportunity for collaboration and success for everybody, and I really think that's going to be in the near term, not 20 years.
I don't think we have that example on our multi-client fact sheet. Maybe we should add it. Erik?
I just got to jump in and correct the crush statement a little bit. I mean, that was a little tongue-in-cheek, but it's also what we're talking about there are the financial results of TGS, but TGS collaborates obviously with all of you in a very good way, I think. Maurice with WesternGeco, especially in the Gulf of Mexico, and with Rune and PGS in Canada, and CGG in Norway and other places. So I think we definitely believe in collaboration, okay? Just to get that straight. So,
Refer to Equinor Times, maybe?
you guys just need to manage your money a little bit more. But I was going to say, looking forward into the future, 20 years, the only way I think I can do that is to look back 20 years and then come back to here and say what happened, and then try and extrapolate that. And the main thing I see is really the Moore's law and the increase in computing power and the increase in bandwidth and the increase in what we can do these last 20 years with computers. And that will undoubtedly continue to develop, and that's why we're looking so much at that in terms of how we're going to apply that power and use that, as Sophie said, to in the end actually supply something seismic, but also more than seismic to the clients. So given that we believe the Exxon, Equinor, BP projections of use of hydrocarbons in the future and shortage, et cetera, I think we'll still be in business. Mm-hmm. It will maybe be very different form, but I think that's kind of the direction I think it'll be going.
Duncan, do you agree on the Uber model? Way for the future?
As long as we're Uber, that's cool. Yeah. But I think, the only thing that I'd add, hopefully fairly concisely, is exactly looking back. And I think the marine seismic field especially created some pretty amazing technology to get to where we were probably 5 or 6 years ago, and then it flattened out. And I think we haven't had the ability to reinvest to get to that new level. So I think hopefully that can start to happen now. And I think a couple of things that look into a crystal ball that's no doubt wrong, but I think you're going to have real time. You're going to have not necessarily as much as... I think it's interesting looking at nodes and streamer, and I think there's an interesting discussion around this automated underwater vehicles. I think that can happen quite quickly. So I think that in turn will, I think, lead to real-time data delivery. So I think it's going to be a very different platform that we can hopefully evolve over the next few years, but I think it'll happen quickly, and I think it's going to be real-time. And then it's to tap into Maurice's cloud. I was happy to see a picture of a cloud. Now I know what one looks like.
Rune, you have the final word on this one.
Yeah, I'm going to be fairly quick, I think. I think we will deliver a lot more data, a lot better quality, a lot faster than what we're doing today. How? I'm not sure.
I like it.
That's a conclusion.
Good wrap.
No. Nikki, if you don't mind, one thing we missed in our discussions is the academia, where I believe now that we need to pay more attention to the universities and the academia, where they have also money to do research, they have good knowledge, and I think this could help while the different service providers and oil companies are reducing their R&D, is to collaborate with academia. So I think that's something that we need to, could help in improving also the technology and so on.
Okay, good point. And we have time maybe for one audience question. There's a couple microphones posted around, but unless there are none, hey, we got one.
The key word that I took from you guys, thank you, the collaboration. And I would like, as an independent consultant, is to have a collaboration among consultants. In other words, it would be nice if any company of you that takes the lead, and I can help you with this, just have a database for consultants. Because you're talking about, you can do good image, but if there is no human experience, forget it. The machine won't do it. There is a limit for a machine. We teach the machine.
Mm-hmm.
So I would like any of you, I'm a member of APG, SAG, EAG. I've been coming to the OTC for the past, even when I used to drive from Oklahoma, from Tulsa to come over here. There is a lot of people with experience. And they get frustrated because nobody will do it like the way I do it. You got to get out. As a consultant, if you don't network is not seen in the internet. You just come in here, APG, SAG, as mentioned before. And I would like to take the lead for having a database at some company. So if you collaborate, just have a database for people to find. It's not LinkedIn. Geophysics, seismic, LinkedIn. Seriously, it's not Wikipedia.
Very good.
Where also we need to get into the cloud. We need to get people into the cloud. I work for CGG. My geophysical tour, I started with PGS. And then I did it clockwise. PGS, Pilatus, CGG, WesternGeco, and now I am with ION. And I have experience from every country. But I know everybody. But a lot of people, they just go because they don't know what I do. We need to get them back. We don't need to lose people. We need to get them back. And I'm willing to work with any of you to have this database.
Thank you.
Very good, Dr. Osman. No, that's a very good point, and I think part of the collaboration, I think it's important to have the consultants part of that, and I think that's what Dr. Osman is trying to say. Yeah.
It is number one.
Very good.
Yes, thank you.
Thank you.
And thank you to all for participating. Thank you again to our panelists and companies for participating, offering your time and investment in these presentations. And thank you all to our audience for attending and participating. And thank you again to Alex for organizing and OTC. Thank you so much.
Thank you very much.
Thank you.